We're live.
What's up, Luna?
Hey, how's it going, Zach?
What's going on, man?
Welcome in, everyone. Welcome into a little Saturday masterclass. Not even a little one, a big one.
Yeah, we have a special guest today. We got Kathy Lien. I hope I'm saying that correct.
Kathy Lean. Kathy Lean.
Lien. Oh, Lean. Okay. Yeah, it's
We got
gonna be
Kathy
cool.
Lean
She's going
joining
over
us.
some macroeconomics, right? And it's gonna be a good one. You guys know me. I don't pay too much attention to macroeconomics. Luna, I'm not sure how much you do, but I know Kathy's huge on it, and she has a ton of books written about it, the subject. So I'm excited to learn from her. I'm here to learn. I'm gonna be a student.
Yeah, I think it's a super special opportunity. So I definitely feel humbled to be here. And it's like one of those things that I'm always trying to understand it deeper and let it kind of slowly integrate into my trading. You know, like paying attention to all the newsprints. Of course, we have to when we're trading. And even if we're using it or not, it's going to affect our trading. So I think it's really important to start to become familiar with macroeconomics. And more than that, Kathy, which I'll give her a little better introduction before she comes on, but Kathy also trades, and she trades patterns, she trades technicals, she kind of does it all. So it's really cool to have a traditional trader who also can relate with us prop firm traders.
For sure, 100%. Right before we bring her on, one other thing. Luna, we're doing a giveaway, right? Do you have any details on that? I don't have all the details.
Yeah, but I mean, I want to see those likes up. I think we'll have a little surprise giveaway at the end, and maybe we can make it for a nice one. We could do Lucid, I guess, and depending on chat I think we should do it at the end of the stream, and let's get those likes up.
So yeah, just stay tuned. Pretty much, we will be running a giveaway towards the end of the stream. But I say we bring Kathy up.
Yeah, and real quick, let's say what's up, guys. If you're with us right now, say what's up in the chat. This is an awesome opportunity to interact with a very experienced trader, someone who can really bring us a lot of clarity in the markets that we're navigating, especially right now with news-driven markets. So guys, say what's up. Say what's up to Kathy and us, and go ahead and hit that like button if you haven't yet. Hit that like button, and we'll use that to gauge the giveaway at the end of the stream. So hit that like now and stick around. There's going to be a lot of really good questions coming in and info. Yeah, here she is. You're still muted here, but I'll give you a little intro here. So guys, today we're joined by Kathy Lean, a globally recognized macro strategist, currency expert, and longtime voice in the world of fundamental trading with more than 20 years of experience dating back to her start at JP Morgan in 1999. So she's known for breaking down how interest rates, central banks, and global economic data drive market direction, and for showing traders how to translate those macro insights into actionable technical setups using chart patterns, indicators, and structured execution. So I'm Luna Trades, joined by my co-host, Zach Arbucci. Kathy, it's great to have you with us. So what edge are you hoping traders walk away with from today's masterclass?
Well, trading is all about having an edge and finding your edge. And I think, everyone who is on your streams usually have their own trading edge. For me, it's macro, it's fundamentals. Macroeconomics sounds like a very intimidating word. I think fundamentals is maybe a little bit more approachable. And I think each and every one of you in this room, including you, Zach, I know that you said that you don't follow fundamentals at all. In one way, shape, or form, you really do, right? I mean, you can't ignore the fact that Iran is in the headlines. You can't ignore the fact that oil is driving everything. So if you even, understand that, a tinge of that, you're thinking about fundamentals. And so it's really about how to think about it right and, how to process it appropriately. And that's what I'm really hoping to share with everyone today, because I think everyone, especially in these types of markets, and, I've been around for a long time. Right now it's about Iran, a year from now, it's going to be something else. A year before that is about tariffs. I mean, it always matters. And so it's really about understanding how to process all of that.
Yeah.
Okay.
I just wanted to say, I think it was perfect to have you on now as one of the first. This is like the first time we're doing this YouTube stream. I thought it was the perfect subject because everything going on. I mean, I started trading in 2020, Kathy. So we traded during the Biden markets. There was some craziness there, but we weren't in any kind of like serious hot wars. And the Trump presidency has been a new experience for me. And I know a lot of people who kind of got started. We're like the COVID babies, the COVID traders. You know what I mean? So I just think it was perfect to have you on at this time.
And we're just now hitting the point where I swear I've heard from multiple people, they're tired of it. They're like, okay, we're ready to go back to before. And in the beginning of the year, yeah, Trump markets are on. It's going to be a big year, but we're all kind of a little tired of it right now. At least I am. I'll tell you that.
Well, I mean, we've got almost 3 more years, right? So I think that, even if you're tired of it, you've got to get used to it.
Yep.
And you're right, Zach. Many people on the stream, and, I want to hear a 1 or 2. Let me know whether or not you've traded during the first Trump presidency. Give me a 1 if you traded during the first Trump presidency. Give me a 2 if this is your first Trump presidency you've traded through. Let's get some interaction chat, because it is important. A lot of the price action doesn't necessarily surprise me. It's not a surprise. By now, everyone knows that Trump loves to make tweets and announcements after the market close. But if you traded during his first presidency, you'll know that, this is what he does. And then, his 8 o'clock, 9 o'clock, 10 o'clock, midnight tweets are not in the norm. So it sounds like in chat, it's about half and
Honestly, it's about half and half, which surprised me a little bit. I would have thought it would be less. So shout out to you guys.
I'm streaming on my channel, which are a couple of old dogs too. So we've probably got a combination of both. But it is extraordinarily important. As much as, I, Luna, maybe even Zach are tired of all this. Like I said, it's not going away anytime soon. And we've got at least, a couple more years of this. And even if, Iran quiets down, which, I think it should soon. I hope it will soon. Something else is going to come around the corner. China, I was just in China. Literally, I flew back from China yesterday. And, I can tell you that, right now they're sitting on the sidelines, but they're going to come back. Remember, Trump was supposed to visit China while I was there. Not that I coordinated my visit with him, but at the end of March, he was supposed to be there. But now he's delayed to May. So they're still in the headlines, and the tariffs, are, not something we're talking about right now, but it's going to come back, and all of it matters, and all of it impacts the markets. And as a trader, I can't even tell you how many trades I've taken using things like oil or as a leading indicator for gold and NASDAQ, and watching that move on an intraday basis and jumping in the trade to see which of the indexes are lagging. And, this is not something that's new. This is something that I was taught to trade at JP Morgan 20 years ago. It's something I trade every single day. It's something that, I think many traders are, either already know or they're beginning to know. And what we call this is cross-market correlations. And that is something I think, everyone, I hope, will find valuable from our chat today. But
are you talking about specifically, like I've been watching how crude and the indices are going opposite suddenly. So is that what you mean?
Well, that is the way it's supposed to work, right? Which is why we're all here today, which is that, crude and indices are supposed to go opposite, meaning that, if you think about it, and this is a lot of what, we're going to talk about, which is that if oil prices are rising, that hurts everyone, right? That hurts businesses, it hurts consumers, it causes inflation, it raises the risk of fewer interest rate cuts. It's not good for the markets. So when crude rises, it's bad for indices. When crude falls, it's good for indices. And while this is interesting on a kind of macro philosophical perspective, it's actually very tangible on a trading basis too, because if you showed a short-term chart of oil and the NASDAQ, there's a very clean inverse opposite correlation, where if oil is dropping and dropping fast on the 1 minute chart and you don't see the Dow moving yet or the S&P moving yet, because it's a little bit of a lag, you can expect that's probably going to follow. And I trade that all the time.
I hope you guys
interesting. So you trade
out. Sorry, but
for real.
You guys get out your notebooks. I'm ready to go. So
yeah, I know you have a bunch of stuff you want to get over, but I did want to ask you that before we get started. So from like low time frame trading perspective, that's an example of a setup that you might take where you're going to look for the lagging instrument and you're going to try and anticipate the move based off correlations, whether they're negatively correlated or positively correlated.
Absolutely. Now, I used to be a
Yeah.
bank trader at JP Morgan. I was the youngest trader ever at JP Morgan. And that was what I was taught. That's why I was learned, from the 20 years ago, and it still works today, which is
Yeah.
that, cross markets. I was on the cross markets prop trading desk. And what that really means in plain English is watching the other markets and trying to figure out what it means for the market that I'm trading, which, for the past 20 years has been Forex. But, in the past, I would say 2 or 3 years, I've been trading indices a little bit more, but it matters. And it matters, 2 decades ago, it matters today. And it will still matter, 5-10 years from now, because the markets and traders around the world are, very much in sync in what they're thinking. And when they're not in sync, that's where the biggest opportunities are. And usually they're not in sync quite a bit on an intraday basis as well.
I love how you already brought up a lower time frame actionable setup almost, because when we see macroeconomics as like, especially a modern prop firm trader, we can't even hold our positions past 5 and some prop firms past 4 p.m. in the East Coast. So we see the macro and it's like, this doesn't apply to us. But it really does. And it sounds like something that's going to help a lot of us here. So I love that you're including actionable setups in your macro analysis, because we kind of forget that you can actually use that big picture every day.
Absolutely. I mean, it's all about trading, right? It's all about how we can profit from it. And it's all about, how you can take the information you're seeing in different markets and actually turn it into your trading for yourself. Now, I don't really talk about it as much today, but for me, there's really 2 things that really matter, which is not only what, the markets are doing and how it impacts each other, but also market timing. Market timing matters a lot. And I think, many people in this room probably have a taste of that, which is that at certain times of the day, you get a lot more movement than others, like the Asia Open. I like to trade the Asia Open. I like to trade the early New York Open.
I'm with you on that.
Yeah. And that's when you will see oil move. You will see, certain things, have a little bit of a lag, and the breakouts are oftentimes foreshadowed by what's happening in the other markets. And so it's something that I think, I actually believe most people are kind of, at least I hope, most people are kind of watching, the other markets like oil or gold if they're trading indices. And if you're not, hopefully you're going to learn to do that today as well.
Beautiful.
Wonderful.
Do you want to, I know you have like a bunch of stuff prepared too. Do you want to, maybe we could show Kathy's screen, bring that up and
I want to ask one question before we get started to chat, which is, I want to hear from you guys, whether you're trading indices or you're trading gold or you're trading Forex. So I can make sure I kind of gear, what we're talking about to what you're interested in trading. I'm going to assume that most of you are indices futures traders with NASDAQ, S&P, but I could be wrong. Let me know. Let me know in chat what you're trading so that I can make sure that we're talking about what you're interested in. Okay, I don't know if we're going to talk about crypto today.
Crypto's tough. Crypto's tough. Kathy, I have a question while we're waiting for those comments to come in. What would you say to, because I think a lot of people are in this boat, what would you say to a prop firm trader that trades the lower time frames, they're day traders, and they say, all I care about when it comes to the news is that it's a volatility injection, that the market is going to have some type of volatility injection, so I need to be prepared for that. Maybe I want to, de-risk my position, move stops to break even, be like anything along those lines, but I could care less what it says. What would your take to someone who feels that way be? Because that's a lot of people.
I think that's a great start. I think that's a great start, which is that minimally, if you have no idea what I'm talking about, or it's like, phew, over my head, but it sounds interesting, Kathy, minimally, you should know when to trade and when not to trade. And, you don't want to be news bombed. So that's like the worst thing that could happen. If you know that the markets are consolidating, you're thinking, okay, I'm going to trade my ranges. I'm going to be happy with this. But then suddenly we've got non-farm payrolls, or suddenly Trump had a 8 p.m. speech or a 10 a.m. speech. And you had no idea that this was happening. That's the worst thing possible. So a great start is knowing when a news bomb could happen, and, when to trade and when not to trade, and that, plays a very big role in the precision of my trades. I mean, I haven't had a losing month trading Forex since 2023. Now, of course, they're losing sessions, losing days, losing weeks in between, but a lot of that has been due to the refinement of knowing when to trade and when not to trade. I don't trade Sunday nights. I don't, I'm out by, early Friday to have made enough money. I don't trade Fridays. I don't trade ahead of Fed. I don't trade ahead of non-farm payrolls, all that fun stuff. It's about knowing when to trade and when not to trade. All right. So what we're going to do is I'm going to go ahead. I'm going to share with my screen. If you just bear with me a second, I just need to move a couple things around on my screen. But yeah, okay. So now I'm going to share. Where's this box here?
I want to drop a poll in here too, because we got a lot of answers to that. But let's see, maybe we can do a poll. So what should I put on it? Forex, futures, equities, crypto? Am I missing something?
That's good. Yeah,
I think that's a good start.
Yeah, that's a good start. Let's see.
I'm going to put that poll in.
Mean, we focus on futures here on this stream, but I know a lot of the chat was originally, like, his prop firm match was really well known in the Forex space for a while. A lot of the chat has started off in Forex, and I think I could say confidently, Luna, that we have converted quite a few Forex traders to futures, but there's still a good amount of Forex traders in here without a doubt. So I think it's going to be a close race between futures and Forex, not so much crypto personally.
All right, look at that. I apologize. I hit the wrong button. I got too excited. Okay, let me hit share screen. All right, my entire screen. Here we go. Okay, so we have a lot that we're going to talk about. I'm going to run through it. Feel free to ask me questions. Zach, Luna, I'm not going to be looking at the questions in chat, so feel free to I'm looking at
We'll keep an eye on them.
Yeah, so Kathy prefers market when Trump wasn't president. I mean, the markets were a little bit more stable and I had more trading opportunities, but, volatility is opportunity. So,
what's funny about that, Kathy? I've been saying that for the last 12 months since Trump came in office. I have this joke. I say BBB, bring back Biden, just for markets, not getting political at all. But it's funny. I've had my best year in history during the Trump presidency. My buddy Austin Silver, you might know him. He was joking with me on that. He's like, you keep saying that, but you're having the best year ever with Trump. So
I also,
yeah.
I did too. Post COVID, I had really good run up. I remember buying all-inning the dip on March 12th. I'll always remember that for the rest of my life, 2020. And now that I think about it, Trump was 2017 to 2021, right? So half of my trading has been during Trump and half during Biden, exactly.
I think, a lot of people were long gold and they made a lot of money being long gold. And it was a one-way trade. It was easy. Yeah, I don't think it matters because he's only going to be president for a few more years. Our trading skills and what we want to learn is supposed to be with us forever, and so we have to be able to transfer this across different administrations and be able to still not only survive but thrive through these markets. So I think, like I said, volatility equals opportunity. I've been doing this for 20 years and, fundamentals has mattered throughout all of that. So let's get started. Let me tell you a little bit about myself. I strongly believe that the markets reward the prepared, which is why, I, at the beginning of every week, talk about all of the things that could affect our trades in the coming week. And, minimally, as I said to Zach, even if you don't have a good understanding of fundamentals, it's over your head. You've got to know what's on the calendar. You got to know, whether you should be prepared or not prepared. I mean, I was just saying that I was in China last 2 weeks. Last week, the first week I traded from China, and I'll admit I lost money. But it wasn't because of jet lag. It was because we had non-farm payrolls. We had, other big events, and it was a little bit more consolidation. Last week, it was pretty much every single trade I took made money. And it wasn't because, I was more in sync with the time zone. It was because, we didn't have any huge data that really could have sabotaged, my trades. So overall, the markets reward the prepared. And I think that's very, very important. Tell you a little bit about myself. I was the youngest trader ever at JP Morgan. I started on the FX interbank trading desk where I learned, how to make markets in FX. And then I got moved to the prop trading desk after the merger, and I learned, how the different markets basically impact each other, and that's what I hope to bring to you today. I've also written a ton of books on this, on trading, on prop trading, interviewing, really fantastic traders. One of the traders is Austin Silver in my Prop Trading Secrets book, one of Zach's great friends. So people who really know what they're doing. So a lot of what I talk about is not just from my experience, but from experience of many other traders. I used to host a show called Money in Motion on CNBC, and I'm still on there quite a bit. And then recently, Charles Schwab scanned my brain and featured me on their Mind of a Trader show. And the one thing that I want to tell you about this is that really interesting. They put me on an MRI scan. And the one thing that they found is that when I made my trading decisions, I actually had very low brain activity. And when I had to decide whether, I wanted chocolate ice cream or vanilla ice cream, my brain activity was much more active because to think about it, to think about, what flavor I liked or not. And the reason and the takeaway from all that was because I have a strategy that I've traded for a very long time, and it's almost robotic for me at this point. So because it's robotic, and also because my risk management is robotic, when the trade is presented to me and they asked me a whole bunch of questions about trading while I was in this machine, that it was, I didn't even have to think before I gave my answer. And that's the way all of you should become, which is that you've got to create a trading plan, follow your trading plan, and follow it as closely as possible, and not even think, because you want to trust your trading strategy. Now, of course.
Can I say one thing? That is so interesting to me. I'm going to watch that for sure.
Yeah, where can we see that?
I pinned it on my social profile. So if you go to Kathleen FX on X, it's the episode that's pinned there.
Okay, I want to drop I will drop your link tree too. I think it's on your X, so I'm going to grab that right now.
Oh yeah, sure.
So question though, Kathy, in regards to that, would you say, so you're having very low brain activity when you're executing your system because you've done it for so many years, you barely have to think about it. Totally understand that. Would you say, though, that you ever have to adjust things slightly due to market conditions, especially based off the current fundamentals that are happening in the world? Like, do things ever need to change for your system, or is your system static? Like, it does not need to shift?
I've actually traded, unlike some people, I would say like my colleague Boris, he changes his system almost every day. And he makes tweaks to it. I have not changed my system for at least the past 10 years. The only one tweak I made was that I took out Sunday, Monday. I don't trade Sunday night, and I don't trade Monday morning because the accuracy was only 50-50. So it wasn't good enough for me. And so, a lot of trading is about positive reinforcement. You only feel confident to take your next trade when your last few trades have done well. If you have 3 losers and your strategy requires having 3 losers before you have the one big winner, sometimes it can be really discouraging. And so I really, focus on high accuracy, and I took that out. And that was the only change that I made. And then, before that, I took out events, I took out different things, and I only trade at the Asia Open, and I only trade at the early New York Open, which is 6:30 a.m. But we can have a whole hour plus conversation on that specifically. But yes, it's almost kind of automatic for me, which is why when I was in China, I was on a vacation with my family, and at 8 a.m. right before I went out for breakfast, I was able to put on my trades without thinking because I trusted my system. I didn't even need to, really, think too much about whether the trade worked or not, because, I believed that over a long course of time. And, I have to be honest, it's really hard to trust your system without experience of trading it. Yeah. That's really the way you build, confidence, which is you've got to trade it, you've got the data, and that data creates this reinforcement. And so that's really the key. And it's not like I can I can't give you that confidence. You've got to build that confidence yourself through experience. It's been a long time.
Do you think there's a point in a trader's career where they don't have to keep gathering data anymore or journaling their trades? Because I hear that all the time. Like, I'm an avid journaler, and people are like, "Oh, you're journaling too much. You're gathering too much data. Don't think about it so much." And I've always thought that that's something I'll never stop doing.
I mean, I don't journal anymore. I don't need to gather data because I've traded it for some time. I think it's harder to put into tangible numbers, but it's really what has given you confidence. And even though I'm a macro trader, usually my trades are on 1 hour charts. So there's still quite a bit of frequency in the trades. Usually I put on about 3 trades a night and 3 trades in the morning. And that creates a lot. That kind of creates thousands of trades over the course, of a couple of months. So I think, just having the data and the substantiality of the data is what creates confidence. All right.
Love it.
Let's get into this. All right. Because I think I have like 80 slides and we've got like 30 minutes. All right. Okay. So why do most traders fail? Most traders, in my opinion, fail because they focus on either charts, news, or the price action. And, they're kind of in a silo where they're just watching the price action. They're watching the charts and they believe that everything is priced into the markets. I know a whole bunch of you will agree with that, which is everything is priced in the charts. But in my experience, and I believe that fragmented analysis ends up blowing up accounts. So the solution, and I believe that fundamentals should give you the reason why you're in a trade. Technicals should tell you when to get in a trade. And then sentiment should tell you whether or not the trade is prime right now. So when it comes to fundamentals, usually fundamentals do not change, every single day. Usually when we have tariffs and we have tariffs happening, they are something that impacts the markets for days, weeks, months at a time. Just like this Iran war, it's been impacting the markets for days, weeks, months at a time. So, fundamentals are something that, you just kind of get your grasp on. I'll give you some resources to do that at the beginning. And then, basically pick the trades that are in sync with the fundamentals. For example, if you think that Iran is resisting a deal, and until there's signs that they're agreeing to a deal, the trade is probably to sell every rally in stocks and to try to buy every dip. But when we have peace or a true ceasefire, it will be buy every dip rather than sell every rally. So fundamentals give you the reason why you should be taking the trade. Technicals should tell you when to take the trade. And sentiment, which I'll get more into, tells you whether the trade is good right now. So fundamentals is the market engine. So why are fundamentals so important? Fundamentals drive the big picture. Central banks, especially if there's only one thing that you learn about fundamentals and you follow about fundamentals, it should be what are central banks doing about interest rates? Because everything that we talk about, whether oil prices are high or oil prices are low, or inflation is high or inflation is low, the only primary reason why it matters to indexes like NASDAQ or S&P is in the form of how it impacts the central bank, whether or not it's going to push them to cut interest rates sooner or hold them back from cutting interest rates. And so that hands down, and even more so from my friends here who actually trade Forex, that's the single most important thing that you should understand about fundamentals. Number 2, economic data. Economic data is very important because, economic data creates volatility, which creates opportunity. And then, of course, geopolitical events, they can override charts in seconds. And we've seen so many examples of that in the past couple of weeks. So how do you use fundamentals in your trading? Number 1, you should use it to determine your trade direction. Number 2, it should tell you minimally, even if you don't you don't understand the fundamentals, when to avoid trading. Number 3, trade after the confirmation when, either a ceasefire is true and both sides have agreed, or you step back. It also helps to help spot divergences and surprises and to manage different time horizons. So fundamentals affect everything. They affect gold, indices, and Forex. And, with things like war, for example, it's obviously bad for indices, good for gold, and it's questionable for Forex because, usually you would think that, war is bad for the dollar or it's good for the dollar, depending upon where you stand. But sometimes when the war is started by the US, the markets don't necessarily see that as being good. And this is actually really important because you would think, that tariffs is actually good for the US because, it brings more money into the US. It keeps, Americans buying more US goods. And so you would think that this is good for the dollar. But if you go back and look at every single time that Trump has warned about a tariff or talked about it, it's actually been bearish for the US dollar because the market sees this as, the US causing the problem, and therefore they're punishing the dollar as a result. And that will be important for all of you to remember, because I guarantee you, once we get past all this Iran stuff, tariffs will come back into the headlines. And you can't assume that if a tariff announcement is made and stocks sell off, that the dollar will rally on a safe haven bid, because it may not. It would actually, it oftentimes has fallen as a result because the market punishes the dollar or the US for being the source of the troubles. All right. So how do we look at fundamentals? We start with the big picture. Big picture, what's going on in the world, what's on the front page news, not just the business, not just CNBC. Then we look at the economic trend. How's the economy doing? Are there actually job losses, or is there job growth? Then we take a look at, what the sentiment in the market is. Is the market rallying? Is it cautious? Then after that, you look for your trends based upon, whatever indicators you use, your trade setup, and then your entry and exit plan. So this is the way that we kind of take fundamentals and we drill it down into the actual trade. You start with the big picture, the general direction, how people are feeling, and then your charts. At least that's what I do.
And let's be real, probably 95% of traders, that is flipped on its head, right? So entry and exit is the foundation. It's everything to them. So,
and
yeah,
that is true. And that's why, in my opinion, a lot of traders, they struggle because they don't really understand the big pictures. I mean, like, for example, why were stocks down on Friday when we're supposed to be getting close to a ceasefire? And it's because these mixed headlines are telling us that that may not be the case. And if you've seen how this has gone through before, you can't trust these supposed deals until they actually happen. So
Facts.
when it comes to fundamentals, it all boils down to the 3 M's: macro, micro, and monetary policy. So what is macro? Macro is, everything that we talked about, which is political crisis, economic crisis, COVID, geopolitical concerns, tariffs, risk appetite. And we see all of this into the charts. And I apologize for going fast, but there's so much to talk about. So, and plus you can rewatch this later on.
I was going to say, guys, this will be available to be rewatched.
Yeah, you can watch this later on. So, I mean, it impacts everything. This is the S&P. Look at the S&P in terms of, this is the market cap. But when Trump won the elections, the market started to rally. And then when he unveiled the tariffs, it started to plunge, and then pause the tariffs, it rallied again. Every single headline mattered to the markets. And even with, most recently, the Dow surged 1,300 points, its best day ever after the ceasefire news. But, it has since come down a bit. And, these headlines matter. And what I really like to do is I really like to read between the lines. For example, if, the U.S., there's been so many instances where the U.S. was supposed to have a discussion with China on the trade tariffs. And then, before that, China would, impose restrictions on chips, or they would take some other steps that gave you a sign that the talks were probably not going well. So you can read between the lines on what a lot of these countries are doing. Like, for example, Israel was still firing missiles into, Lebanon or Iran, despite the supposed ceasefire. So all of this should have told you that it's not going to end quickly. And, you can read between the lines and get ahead of the trade. And there's no, better example than, the US COVID lockdown, where this is a chart of gold. And we had a huge move in gold, not only here, but also off of the Iran war and the tariffs that caused all of this to move. So macro is the world that we're living in right now. That's the world that's the headlines that are not going to change in an instant. It's going to take time. So what is micro? You've got the big story. Micro is day-to-day economic data, like, inflation data, growth data, jobs data, trade data. These are the things that impact the trade, not on a weekly or monthly basis, not setting the direction, but what impacts your trade on a daily basis. And this is when you have to understand what is on the calendar. Like, for example, last week, I believe we have, I was on vacation, but I believe we had retail sales. So I would never trade ahead of retail sales. I would never trade ahead of non-farm payrolls. I would never trade ahead of the Federal Reserve rate decision. So you have to know what's on the calendar that could affect your trade. For example, next week, every week I build my economic calendar for the week. And, and it's an exercise I do for myself in order to, understand what's ahead. So next week, for example, I trade FX. My most lucrative currencies are, the Euro crosses, Euro Aussie, Euro Kiwi. But next week, we've got Australian jobs report. So there's no way I'm going to be trading Aussie ahead of that. So you have to know what to trade and when not to trade. And
question now, real quick, Kathy, when you say ahead of it, do you just mean like that day? You're not going to take a trade that day, 2 hours before, 15 minutes before? Like, what's the time horizon there?
Very good question, Zach. So I said that, I only trade twice a day. I trade in FX and also mostly in indices. But I trade at the Asia Open, which is 8 p.m. New York time. And I trade at the early New York Open, which is 6:30 a.m. New York time. The reason why I've selected those times to trade is because that is when we have the kind of new participants in the market. And when you have the new participants, you want momentum. So I'm a trend trader and I'm a momentum trader. In order for my strategy to work, I need participation. And in order for there to be participation, it's in the market open. So your question is, let's say we have NFP day. When do you not trade, Kathy? So I don't trade the Thursday night before it, and I don't trade the 6:30 a.m. before it either. Why? Because, think about it. What's really happening? Consolidation, right? I need a trend happening. I need momentum. I need gas I need my foot on the gas and the other feet on the gas in order for the trade to work in my direction. And if everyone's kind of like, let me sit back, let's see what happens, that is when my trade does not perform well. And so I don't trade the evening before. I don't trade the morning of, but the number comes out 8:30. I've got my news trading strategies. Sometimes I'll trade after it because sometimes there could be quite a bit of continuation. But when I do trade after it, it's not my strategy that has given me, 23 months of winners. It's just, trading news. With my strategy, if I stay true to my strategy, I only trade at 8 p.m. I only trade at 6:30 a.m.
If you were going to trade it, would you be trading like the spike that the initial data print creates, or would you be waiting to trade the follow through or like the afterglow?
So what I do is I trade what I call the news time box. And so, with the news time box, basically, with the data release, I'll set, let's say we got let's say we're looking at 15 minutes. So I'll set my high of the 15 minutes and the low of the 15 minutes and then wait for the breakout. Because sometimes it doesn't matter, right, Luna? Sometimes, you think the number should be important, but the market doesn't care about it. And so you don't want to get caught in the fake out. So I would wait for, I would highlight the 15-minute high or low, high and low, and then I wait for the breakout, and then I trade the breakout. Because if it's a true breakout, if it's meaningful data, there will be continuation. The last M is monetary policy. Nothing matters more than when interest rates are headed. Who's going to raise interest rates first? Who's going to be the last one who's still cutting interest rates? That is generally the most important driver of currencies, which is my bread and butter. But even if you trade indices, which is most of you, it matters a lot because it decides whether or not the rally in stocks can last or will it not. That is one of the most important things. So how can you stay on top of this? My favorite resources is CNBC.com, Bloomberg.com. Every single morning, it only takes like 5 minutes. You go on CNBC.com, you see what the headlines are. You go on Bloomberg.com, which is more international and comprehensive than CNBC. You take a scan of what the headlines are. Before you even start your trade, I always recommend go on CNBC, go on Bloomberg, check out the headlines. I'll look at Financial Juice on X because they cover everything. Any type of comment that was made by Trump overnight, any type of missile that hit something, anything, Financial Juice will cover it. So I just scan Financial Juice really quickly and then make sure I've got everything down. Zero Hedge and Investing.com are good as well, but pretty much, and usually there's a little less there than Financial Juice. Then I'll look at the calendar. I already know ahead of the week, but I'll look to see, How was the data last night? How's it in Europe? How's the data in Asia? What's coming up today? And then usually in the morning, you can also follow me. I'll do a video that talks about what's moving in the markets. But these are the resources that I recommend. So then after you kind of digested all of this, that is when you use your own technicals. Because technicals, fundamentals determine the direction that you're driving, the path that you should be going. Technicals is your steering wheel. It basically should tell you when to trade. It should define your entries and exits and stops, how to manage your risk with precision. You should use your technicals, those highs and lows, the support and resistance. That's when you should use those levels, determine when you should get in and out in the direction of the fundamentals. So fundamentals can set the direction, but technicals should set your timing. And in terms of technicals, so many of the wonderful people who come on PFM's stream will talk about market structure, ORB, VWAP, support and resistance. You can learn a lot from them, and you can learn a lot from them every single day. So, I'm not going to talk about that too much, but instead, what you have to know is that markets don't move in straight lines. And even in strong fundamental trends, just because you know that the economy is going to shit doesn't mean they just sell right now. You need to use your technicals to define the timing and your entries and exits. And that's why, I firmly believe that the best trades are supported by fundamentals, technicals, and market sentiment. Market sentiment is the market's mood. And in many ways, this is the most subjective and the hardest part to define, but also the most important part of the trade, because you only really want to get into the trades when the market is in sync with you. So what I mean by this is, for example, let's say we have a horrible non-farm payrolls report, right? You think this non-farm payrolls report is horrible, the markets are selling off. But the markets were up before non-farm payrolls. Maybe they were up a lot. Maybe the Dow futures were up like 300 points before non-farm payrolls. Non-farm payrolls report, and it was up because, maybe, we're going into some sort of negotiation in the Iran that they think is going to go well. Non-farm payrolls comes out terribly. Markets sell off a little bit. And then guess what? It recovers. How many times have you guys felt that? How many times have you guys seen that?
I actually wanted to ask you. I wanted to ask you about that. I was about to ask, what is your take on the saying "buy the rumor, sell the news"? Right, where I said, where they say that the market already priced in that news event because investors anticipated that release. What's your take on all of that? Because I feel like it's not as simple as, the news was good for the market, so let's buy today.
Yeah, it's absolutely important. And I cannot say that every single time it's going to be buy the rumor, sell the news. That's only, I think, obvious in retrospect most of the time. Yeah. But what is not obvious in retrospect is that if stocks are up 300 points and a retail sales number or a non-farm payrolls number comes out bad, but not so bad, or it won't matter. In this case, nothing matters to the Fed in terms of jobs, right? Because all they care about inflation. Then, what ends up happening is that the movement is short-lived. It sells off and then it rebounds right back. I mean, it happens so many times because the market was bullish already. It had other reasons to be bullish and it didn't really care about the report. And that is why sentiment is so important. And that is why before we trade on the day, before we get into the data, it's always important to take stock of what the markets are doing and what the overall mood and the sentiment of the market is. Because the sentiment shows how strongly the market believes in the move. And it helps you determine whether you're going to have a fake out or a real trend. And it helps to explain why good data is ignored. And it highlights what could be the next short-term move. Now, of course, if it's completely from left field and we had the market expecting 100,000 non-farm payrolls, they came out like minus 30, then, it could change the sentiment in the market. But if it's just a little bad, then, what is how the market was originally feeling will probably resume despite the bad report. So how can you gauge sentiment? I'm saying all these things, sounds great, but you may think I have no idea how to do this, Kathy. You start by looking at what the other markets are doing. Stock indices will tell you whether we're risk on or risk off, whether people are optimistic, which means risk on, or pessimistic, which is risk off. Bond yields are also very important. I love bond yields. I'm going to show you some charts showing the correlation between bond yields and gold and bond yields and stocks. the treasury market is the biggest market in the world, and bond yields single-handedly will determine how everything is moving, because it's the smartest traders, the biggest traders. It's not the retail dumb money. It's like the real people who are trading bonds on the banks and interbank level. So usually they have their direction is the most accurate direction. And then for those of you that are currency traders like me, I always look at, which currencies are lagging, which currencies are leading. That tells me, which ones are strong, which ones are weak. Commodities, they also tell us whether there's safe haven, inflation hedges, and then crypto. There's a bunch of crypto traders in chat that tell us, what is the speculative risk appetite in the market. Sentiment matters because it confirms if the market is going to have follow through. It helps to avoid fighting the herd when conviction is strong, and also provides early warning signs when fundamentals don't align with positioning. And it lets you ride trends longer by helping you measure the psychology of the market. So sentiment is very important, but sentiment itself is not important in just a vacuum. Sentiment is important based upon the time of the day. And I believe, that the New York trading session is broken out into 5 distinct segments. And this is true for stocks. This is true for currencies as well. Early New York Open, I'm in New York, so all of this is in Eastern time. Early New York Open, 6:30 a.m. is when I love to trade, because New York traders are just joining the desk. We get the first kick in momentum. And oftentimes, whatever's happening during the London session will have follow through into the New York session. So you'll oftentimes have a breakout in the direction that was happening before, right around 6:30 at 8 a.m. New York time. In fact, I've been trading indices, and oftentimes around 7 a.m., you'll oftentimes have some sort of breakout move in the indices. And some of you may know this already, or some of you may only trade the 9:30 open, but there is oftentimes a very good opportunity between 6:30 and 8 a.m. New York time. Then 8:30 to 10 a.m., that's when we focus on news. And when we focus on the New York stock market open, and we focus on our opening range breakout trades. So you should only really be focusing on your opening range breakout trades between 2 and 3. 2 is when we certainly have your data. Then you want to mark your highs and lows, and you want to trade on the breakout of the data. Once that happens, you got your stock market open, then you trade your opening range breakout. Then we have the London close. Now, some of you may have noticed that, and some of maybe you don't, is that oftentimes when we have the London close, a new high or a new low will be set around that time, but it'll be a fake out. It won't be a real move.
I've noticed this. I've noticed this. Yeah.
And why does that happen? It happens because timing matters. Because London traders, you're getting the last push before they leave the desk, and they're walking away. And so usually during this time, whatever moves happens tends to be a fake out, not a true breakout. And that, if you know it, is very valuable, and hopefully will save you from bad trades, because if you won't be chasing that breakout. And then the last trade that I love to do, that I've been actually trading indices on, is the New York close. The New York close oftentimes will have continuation as well. And I'm getting a nod from Luna, and this is actually a time frame that is very high probability for high accuracy for a continuation trade in the NASDAQ and ES. And that's because US traders, same thing, you're getting the last push of the day, and there tends to be continuation. And we could spend, and I have a market timing course where I spend like weeks talking about market timing and how valuable it is. But a lot of traders, they trade at specific times of day. Now, I'm asleep during the London session, so I don't trade the London kill zone. But some of my great friends, and Tyler, for example, I know you know Tyler, he loves to trade the London kill zone. And so everyone has their sweet spot. Like Logan from Max Option Trades loves to trade the close. So everyone has their sweet spot to trade, because they've learned each of these little elements that you see here. They learned that in their sweet spot, either the opening range breakout around this 9:30 a.m. period, or the New York close is the best time to trade.
You know what I love about this, Kathy, is a lot of people notice those things like, oh, like the London close, but they don't know that it's the London close. So they're really just recognizing patterns for the sake of recognizing patterns. I feel like you actually, you break down the mechanics of it, which is very helpful.
Yeah, I was about to say the same thing because like I have one of the best traders in my community. He trades the MOC print. And at first I thought he was crazy, and I've watched it so many times with him where it continues just what you said. And so we all see these patterns for ourselves. And I trade the initial balance breakout in London session, and it's been working so good that I keep saying, well, that's the only trade I want to do. Why am I taking these other trades? And you're sitting here saying, London, you trade the follow out, not the fade. And then I've noticed with the first hour of New York, it will often fake out and actually fail to continue. So
I mean, there are so many interesting things about market timing. For example, for those of you that trade currencies, like, we may have an Australian jobs report like we do next week. And you would think this jobs report is so good, I'm going to jump into the trade right after it comes out. And what ends up happening is that you jump in the trade and then it fades and it fakes out and it reverses. And then it does nothing until the 2 a.m. Eastern time London open, when the other big traders come into the market, and then they get the push. So, it's really important to understand how important these market opens are. And so some of you are probably not American like, Zach and I. I mean, Luna, where do you live?
I'm in Florida right now.
Okay, so we're all American. Some of you may be in Europe and, you're awake during the London Open. That is a fantastic time to trade because you do get breakouts. And oftentimes in gold and in NASDAQ, you will have a breakout momentum move at 2 a.m., 3 a.m. New York time. If you're open then, because, that's really what happens. London trading session, you want to look for early breakouts and stop hunting. US trading session, what I do is I look for a continuation in early US because, and then, when we have the London close, that's when you tend to see the peak and the market's peak and pass their overlap. And then the Asia session, you'll have, some people say, I never trade Asia because it's dead, or you shouldn't trade Asia because it's dead, which is true between 4 p.m. and 7:30 p.m. New York time. Yes. It's range trading. It's quiet. The spreads are widening. Your prop firms are telling you got to shut down your trades, all that fun stuff. But once you come 8 o'clock, boom, oftentimes we have a big breakout. And that is really my, money period, which is my Asia trading session, trading the breakouts, not just in Forex, but also in gold and indices, is usually the best trade right around 8 o'clock. And I want you after the session to look at the charts and see for yourself how important all of this is.
Chad, I'm sorry. I need to say I'm vindicated right now because Kathy, I've had one of my, I had the best month of the year so far for 2026. And it's kind of funny because about 70% of my trades on some of these Tradeify accounts I was taking have been done during the Asia session. I've created a model around it. And I always say you get the volatility injection right around 8 p.m. Eastern. After 7:30 Eastern, that's when you start looking for it. And Kathy's absolutely right, guys. You go back to the charts, Asia will be dead from 6 p.m. when the market reopens if you're trading futures till around 8. Out of nowhere, you will, almost like clockwork, get that volatility injection, and you can create models, trading strategies around that, just like Kathy. So that's awesome because I keep telling everyone, Asia 2020, especially 2026, Asia session has been great lately.
Zach, I can tell you this is not just true of 2026. I've been doing this for 20 years. I actually dyed my hair, so you don't see the white hair, but it's been true for a very long period of time. And this is great for a lot of people because, this is after work. Many people work. They can't trade ORB at 9:30 because they're, doing their real jobs. And so they need to find time that works for them to trade. And, if you have the evening to trade, then 8 o'clock is usually, depending upon where you are, after dinner for those of us who are on the East Coast. And this is a prime time to come to the markets once, life has settled down and start trading. So really, it's about fitting trading to your lifestyle. You can trade the opening range breakouts. You could trade the early, if you want to trade before work at 6:30 a.m., you can do that. Or you can just zero in on the Asia trading session. So you don't need to trade all the time. Just need to trade, pick the right times to trade. But you need to pick the right times to trade. You can't say, 4 or 5 o'clock, I feel like I'm ready for trade. Let me put a trade on for absolutely no reason. Or, it's my lunchtime. it's lunchtime. Let me just put on a trade because, I'm watching the screens. I'm eating my sandwich. Terrible time. You want to have a reason, and you want to have the right time to trade that reason. And understanding that is part of the deal. So sentiment turns a trade idea into conviction, and sentiment usually comes around the market opens. So connecting the dots, fundamentals gives you the why, technicals give you the when, and sentiment tells you how strong the trade is. Now, I have to admit, I've got 40 more slides after this one. But, I don't think we have time for all of it. But I want to share with you the philosophy of what I wanted to share. I'm just going to scan through really quickly, and then I'm going to show you some live charts, which is that, this just talks about gold in general and what affects the price of gold, like interest rates, US dollar strength. So the philosophy of what I wanted to show you is that the markets impact each other. And there's a very strong correlation between each of these. So this is a chart of gold and US 10-year treasury yields, slightly older chart because I just got back from Asia and I just put this on, but it's still very relevant, which is why we're going to go to live charts. But you can see here that gold is the candlestick. The line is 10-year treasury yield. So there's like an inverse correlation between gold and 10-year treasury yields, where when you have 10-year treasury yields going down, oftentimes gold is going up because these things impact each other not only on a daily basis but also on an intraday basis. And that's really what I want to get to you guys, because most of you, I'm saying, are probably not swing traders. Most of you are probably day traders. You don't really care about the daily chart. You care about the 1 hour to the 1 minute chart. And what I'm trying to say is that these correlations also matter on an intraday basis. And you can see, the influence of gold as well as 10-year treasury yields. And it also impacts interest rates. But not only that, gold also tracks the dollar. Gold is priced in dollar. Oil is priced in dollar. So, typically when if you're trading gold, you're trading oil, you should be watching what the US dollar is doing. So it is very, very important. And what I really wanted you all to take away from this, and we'll look at some live charts in just a minute, is that these markets impact each other. It won't be every single day, but most of the time, especially when we have big moves. And it impacts how currencies move, and they have correlations, but it also impacts how equities move. Now, this is really interesting because most people think that, gold is supposed to be the quintessential safe haven asset, meaning that if stocks are crashing, gold should soar. If stocks are rallying, gold should fall. But has that been happening? I mean, no, right? Right now, they're kind of moving. They've been moving in sync with each other. So what you think should happen, what people tell you in a textbook thing happens, is not necessarily what happens in real life. Because gold is also a speculative instrument. And many of you trade gold on a speculative basis. And there were so many traders in this long gold trade that when the market started crashing, they were selling everything in sight. They were selling gold, they were selling S&P, because everything was highly leveraged. And when traders got nervous, they bailed out of everything. They bailed out of gold and they bailed out of the S&P. So everything was being sold. So market correlations matters a lot. And I think this is a really good opportunity for me to kind of pop on my live charts. Let me see if I can pull up my live charts here. Can you see me? Okay, hold on. That's my screen. I'm going to put on 1 second. Good thing I don't have a questionable screensaver. Okay, so what are we looking at? All right, so we're looking at Eurodollar. Okay, so we don't want to look at those Eurodollar. Let's look at NASDAQ, all right? We've got NASDAQ here. And I'm going to put on oil. And we're just going to move this onto the same scale. It's a 15-minute chart of oil. And let's just make this regular. Okay. So this is a 15-minute chart of NASDAQ and oil. And you can see, look at this. What's going on here? Here, the blue line is oil. This is NASDAQ. And you can see here, oil started crashing well before NASDAQ started moving. I mean, NASDAQ didn't even, where's my arrow? NASDAQ didn't even really start rallying till over here. which by this time oil was already down quite a bit. So this is a sign of how you can use the other markets as a leading indicator. And this is the closing bell. I call this the closing bell rush, which is when you get a nice push in the NASDAQ, a directional push in the NASDAQ once you have a breakout. For those of you that love breakouts, you could have, let me make this white. Hold on. You could have, highlighted the recent high and low over this period. You can, whatever you want to choose to draw. Once you've gotten a breakout, you knew that NASDAQ was going to rally when oil was falling, because these two instruments are, basically oil has been driving NASDAQ. And that's an example of how you could have used this as a leading indicator. Same story at the 6:30 a.m. New York Open. Look at this. 6:30 a.m. New York Open. Oil had been falling already. NASDAQ was frozen during this time because people aren't waking up. And then New York traders come in, and guess what? It should not be a surprise to you that the trend is upwards, because oil is right now these days, oil is the leading indicator of the trade. There's nothing that matters more than oil to what is moving in the NASDAQ. And so that is, go ahead. You have a question?
Yeah, I'd love to ask you a quick question on that. So currently oil is the leading indicator towards the indexes, so the ES or the NASDAQ. Is there ever a time it's on the flip side of that? Would it depend on different fundamentals, or like how can you gauge when one instrument is going to be the more leading indicator?
Well, it's never the case, or it's rarely the case, that oil that stocks are the leading indicator of oil, unless we're in a situation where it's just kind of, I don't know, we had like those 1,000 point days, for example, that was just driven by pure liquidation. Instead, there are often times where oil may do nothing, and that is not, like, if once we're past this whole Iran war thing, and we move on to other fundamental drivers, oil will no longer be the leading indicator. So what becomes the leading indicator then? Then we always default to treasury yields, the 10-year treasury yields. 10-year treasury yields are probably the most important leading indicator of where the markets are going. But right now the market doesn't care, but you'll see, there's a very, very tight correlation between treasury yields, or there can be a very important tight correlation between treasury yields and the market. So the bottom line is, this is the wrong chart, but here, if we go to NASDAQ and we pop on, let's get rid of oil, and we pop on 10-year treasury yields. And you can see my watch list over here. This is how I'm watching all the markets at the same time, which I've always got my indexes, I've got my bonds, I got my commodities here, and then I got my currencies. But what I want to show you here is that the blue line is US Treasury yields, and the candlestick is the NASDAQ. And the way it works is generally when yields are going up, it is bad for stocks. And when yields are going down, it is good for stocks. I mean, think about why, right? Because yields reflect where interest rates are going. And so if interest rates are low, it's good for everyone, right? Your credit card payments are low, your car payments are low, your mortgage payments, if you got adjustable rate mortgage, is lower. If yields are going up, everything becomes more expensive. Your mortgage payment becomes more expensive. Your credit card payments become more expensive. Companies that borrow, they got to pay more. So that is why when yields are up, it's bad for stocks. When yields are down, it's good for stocks. So when oil is no longer the leading driver, when we're past this Iran war, which hopefully will be sooner rather than later, we default back to yields. And yields will be the leading indicator. Just like here, you see that yields have soared, and it's rising. And right now it's about the same time, but that should tell you that stocks should be falling. So I'm always looking at what yields are doing. So this is a very, very important leading indicator for what markets are doing.
In the hierarchy that you started with, of saying like the big picture, the economic trend, the sentiment check, and the trend confirmation, where is this exactly in that? Is this a trend confirmation or the sentiment check?
This is the sentiment. This is is the trade going to work for me today?
And so this is where you create your bias of which trade you're looking for, and you can filter out so you don't end up over trading or getting the mixed signals.
Sort of. It's yes, it is a filter. But it's going to tell you whether the trade is going to work for me right now or it's not. Because, for example, if you're in this NASDAQ trade and you're seeing like oil start to move in the opposite direction, then it's telling you maybe it's not going to work for you. The other markets are not supporting that. That is why I'm always looking at my right-hand side watch list to see whether or not, starting with stocks on top, we're risk on or risk off right now, and how that's changing, whether it's rebounding from the low. Like, I'm always watching this over here. I'm always watching, what bonds are doing, although a little less so these days because oil is really what's moving. So I'm watching oil a lot to trade this, and then I'm watching bonds and stocks to trade down here, which is Forex.
And for those of us who are trading lower time frame, which to me, lower time frame is the 15-minute, which is my favorite time frame. But do you look at that on the 15-minute, or would you keep that on a higher time frame?
No. I mean, this also works on a ultra short-term basis. And that's what I'm really getting at. Let me get rid of this because right now it's all about oil. I actually trade NASDAQ and S&P based upon what oil is doing on on the 15-minute chart, as well as even on the 1-minute chart sometimes, or the 2-minute chart. I'm watching that because oil is moving faster than the indices.
Will you ever put on both sides?
What does that mean, both sides?
Like, would you hedge by trading the other instrument as well, or would you short one and long the other?
No. No, I just use them as a leading indicator rather than anything else. So that's my trading edge. That's the way I trade the market, and that hopefully will give you some information on watching the other markets as well as the importance of market timing. But I want to take this opportunity to tell you that this is my trading edge, but everyone has a different trading edge. And so that is why, we along with Prop Firm Match, is doing our second Prop Trader Fest on May 9th. You're going to hear our last Prop Trader Fest had 22 speakers. You have big names, Big Daddy Max, Austin Silver, Zamco, Candace, Tyler, lots of really great names that shared with you their trading edge. And so we're coming back, this time in collaboration with Prop Firm Match on May 9th, completely free. It was such a great event, so well received last time around. We had 6 hours worth of content, and believe it or not, Zach and Luna, people pretty much stayed for the entire 6 hours, which I was really, really impressed by. And we have an entirely new lineup with really great traders. We have Nick Leeson. For those of you who don't know Nick Leeson, he was actually the trader that took down a 233-year-old bank. And he broke the bank, which is an incredible story of, risk, redemption, and recovery. And they even made a movie out of him. I don't know how many people have watched the movie Rogue Trader.
I knew that name.
It's so good. It's free on
Nick,
YouTube. You can watch that movie for free. It's really good.
Rogue Trader. It was by, I don't know how to pronounce his name.
It's stressful, though.
Ewan McGregor. Is that how you pronounce his name? This is the man. He, they did a whole movie on him. He's going to kick off Prop Trader Fest on May 9th. We've got Marcy Silfran. Marcy Silfran is the number 2, not the number 1, but the number 2 World Cup futures trading champion right now, the Robbins World Cup. She's going to share with you her take on the markets, the secrets of the World Cup championship. We don't have Big Daddy Max, but we have Logan, who is we had Big Daddy Max last time. We have Logan from MOT this time, and he's going to share with you. I was in the room. Neither one of you came to MOT in February. I was in the room when Logan made $100,000 in one trade within like seconds. And so he's going to share with you his tactics of how trading changed his life and how he looks at the markets. We've got Linda Raschke. Do you guys know Linda Raschke?
Absolutely. Love Linda.
Linda is the world's number 1 female trader. She was featured in Jack Schwager's Market Wizards book. So she's truly a market legend, and she's going to be speaking at Prop Trader Fest. We've got Austin talking about VWAP. We've got Tyler talking about swing trading. We have we have the power players of the prop firms, AJ from Lucid, Brett from Tradeify, Dan from Apex. You can ask them questions. We've got, CFD leaders. We've got Marianne, who is the curly trader from Tradeify. We've got Lumi Trades. We've got Salma. So we have Rob Hoffman, who's a 37-time international trading champion. So many amazing people coming to speak to you all completely free on May 9th, sharing their trading edge. So just click here. This is old stuff. We're going to be updating it soon. Click here, register for it. Make sure that you get on the list when we share with you the details. Completely free. Mark this date. We're going to start at 7:45 a.m. Eastern time, and it's going to go till 1:45. Come for part of it, stay for all of it. It is also a charity drive. We're raising money for Strong Minds. And, because May is Mental Health Awareness Month, so we're going to be raising money. That means this event is completely free. But if you want the videos, you're going to pay $10 for the donation. 100% of that goes to charity. So if you want the videos, you want to watch them again and again, that's going to be going to 100% to charity. We raised a lot of money for St. Jude's Hospital last time around, and for veterans last time around. So we're hoping to do the same for mental health this time around. Prop traders doing good, prop traders learning the edge from, tons of really amazing people. So make sure, the point of today is that I'm sharing with you my trading edge, but there's so many amazing people who will share with you theirs. And so come join us for this amazing event.
I can't wait.
Yes, exactly.
We got the link in the chat here, guys. PropTraderFest.com. Super exciting.
He's going to come help moderate some of these sessions.
I will be there.
It's going to be incredible. If you guys have questions, feel free to ask me. But one thing I just want you to do is go to PropTraderFest.com right now. Register for it, completely free. Mark it on your calendar. Don't forget about it. Clear the day. It's the day before Mother's Day. And join all of us for this incredible event. All right,
super excited. Yeah. Thank you so much, Kathy, for everything. I'll tell you right now, I'm going to start looking. I am the guy who does not put too much attention onto fundamentals. I'm doing just fine trading, but I could always expand my edge. I'm going to start doing some testing with the yields and with oil and how it affects NASDAQ. You kind of have inspired me. So thank you for that personally.
I'm glad. And also for all of you, pay attention to market timing. It matters a lot. I think you may be doing it, subconsciously, but there are reasons why, some trades are working at certain times of the day. Did you enjoy today's session? If you did, give me a thumbs up,
Yeah, W's in the chat, guys, for Kathy. W's in the chat.
Thank you so much for joining me. But as I said, I'm one of many, come learn to Prop Trader Fest, learn from, 22 traders who will be joining us and some of the biggest names in trading. And we're very, very excited to bring this to you on May 9th. And tell your friends about this. We're going to be giving away a lot of prop challenges as well during this event. So definitely join us.
Thank you again so much, Kathy. Yeah, we can, we'll let you go now. We'll stay, Luna, and run our giveaway. Speaking of giveaways, but again, thank you so much for hopping on. We got to do this again sometime, hopefully in the future, but for now,
Absolutely.
We'll wait until May 9th at least.
As I said, I have 40 more slides that I didn't share.
So make sure to check out her YouTube, because that's where I found a lot of your videos that were really awesome. And you go into so many different subjects. I was so surprised, like breaking down technical indicators to the macroeconomics. So there's a lot of resources there that I think we all can use. And so a lot of short videos too. So you can just start playing through them.
Yes, and every single day I do a fundamental breakdown in the morning. So that kind of sets you up for the fundamentals of the day. And so you can get that on my X or on my YouTube or Instagram. My Instagram handle is Forex Macro Queen, kind of on brand with me. But I try to share, my insights, because it is, a struggle for people to get started in terms of fundamentals.
I'm dropping your link tree here in the chat, so everyone can go there.
So this is the old list. This is last time. We did this in January. And this is all the speakers we had in January. In May, We got to refresh the website, but you can register for it now. We're going to have all the speakers I just talked about. And Nick will be coming on right at 8 a.m. So make sure you grab your coffee and show up bright and early.
Awesome.
Love it. Thank you so much.
All right.
All right.
Have
Thank
a
you
great
so much,
show,
Kathy.
guys.
Yeah,
I'm
we'll
gonna
let you go.
bid
Enjoy the
adieu.
rest of
All
your
right.
weekends. Have a good one. All right. Shout out Kathy, man. That was good,
Oh,
man. Luna, were you
dude.
inspired by anything?
Absolutely. And I mean, I can't, the timing thing, like, well, the whole, I mean, everything so much. I even took some notes and saved some of the slides, but the timing thing just stood out to me because I've been really doing that with the initial balance. And she was talking about the orb, and it makes so much
Sure.
sense. And so I'm going to go in and watch some of her videos specifically about that London timeframe.
Yeah, absolutely. I was thinking that because she actually put down a lot of knowledge on things that you could use in London session too. Like it wasn't just for a New York session trading or anything like that.
Yeah. And yeah, I think so much value from that conversation, really. And
Shout
just
out
things that
Kathy,
we all
man.
experience. We all see these things, and to have someone with the experience to be able to put the words to it and explain it so simply and with data to back it, it just confirms what we already feel. And sometimes we feel crazy for these things. It's like, I remember shorting gold every day at 8 p.m. a year ago. Or I forget when that was
totally.
exactly. I forget, end of last year maybe. And it's like, is it too crazy to get on my computer right now and 8 to look for the gold short? Is that weird? I must be crazy. No, we're like, it's happening for a reason.
And seriously, the prop trader fest, I'm super excited. I'm going to do like a couple of panels, I think, where I talk to some of the people. Can't wait for that, guys. We're going to be talking about that a lot more now up until May 9th, excuse me. So stay tuned for that. We're going to bring it up a lot on stream until it happens.
Dude, let's run a giveaway.
Yeah, let's do it. So we're going to give away a Lucid account. Should we just do it the standard way through Discord?
Yeah, I guess so.
That makes sense. I'll link the Discord in the chat. Let's run this Lucid giveaway, guys. Stay tuned. We're not done just yet.
I know you gotta go too, so let's we can.
Yeah, it's cool. It's cool. I got a few more minutes, so we can let's get this giveaway going. I'll create the portal real quick.
Okay, so chat, make sure to hit that like, guys, and we're gonna have more to come. So this is our first weekend workshop, and so we want to keep bringing big guests for you, and so hit that like, support the stream, and we'll be able to keep getting bigger and bigger guests. So big shout out to Prop for Match for making this happen. Big shout out to our sponsors for also making this happen. Lucid, Aqua Futures, and Top One Futures. And I think we're going to go ahead and give an account away with no activation fee. So I already said Lucid, so let's do a Lucid one, no activation fee.
Sure.
And just in honor of having a legend, a queen, Kathy Lean, on stream with us. So I can't wait for the next one already. This got me hyped.
Yeah, guys, give us some opinions on what kind of stuff you'd want to see for these Saturday streams, because we're going to be doing them once a month. Also, I did just drop the Discord link. If any of you guys are new, if you came over here from Kathy and you're still watching, to enter into all of our giveaways on Prop for a Match, you got to be a member of the Discord. So I just dropped the link right there. Click that link, join, become a member. It takes like 5 seconds.
And the other way is discord.com/join/prop for a match.
There you go. Or just go to the stream chat after that and just type in Kathy into the entry portal, and you will be entered. What do you say? We'll give everyone till like 11:26. We'll give you like four more minutes.
I think less, but okay.
11:25. You got 3 more minutes, chat. 11:25. But yeah, I'm trying to think what we should do next month, bro. Like, do you think? I don't know. We got to think about who we can get as a guest first and bring it around that. But these Saturday streams are cool, man. I like them.
Yeah, and so thank you guys so much for joining us. We kind of did a soft launch for the weekend workshop, and it's really good to see some of the usual friends of the show here in the chat. So I really appreciate you guys coming and joining us.
Hey, we got Alex in the chat. Teammate Alex, what's good, man? Our PM session host. We got to get you on one of these too. Maybe next month.
Get your mod on as the next guest.
AJ, shout out AJ. Yeah, guys, I'm telling you, man, like the yields and crude oil direct correlations or inverse correlations on the NASDAQ. When Kathy pulled up those graphs on the chart, I mean, it really was like clockwork, and she didn't even have to cherry pick or do any hindsight examples. You know what I mean, Luna? Like she literally just put up the chart from yesterday, and there were direct inverse correlations between the NASDAQ and the yields, or the NASDAQ.
Yeah, and she had the full confidence to do that too. She's like, oh, let's just open up the live chart.
Yeah.
We do it live.
Yeah, really cool. Really, really cool.
It saved you from yard work. Let's go.
Wait, does that mean you didn't do the yard work, or does that mean you've been listening in your ears while doing yard work?
Hopefully the latter, because then you still have yard work.
You still got to do it. Yeah. What are the giveaways? We're just giving away one Lucid Pro account, guys. One Lucid Pro.
Yeah, that was an awesome talk. I took some notes here. I took some screenshots. I love how like everything I felt like could be applied to most people. It wasn't like we didn't get into exactly sizing and risk management and all that stuff that a lot of people do tend to talk about. We went for this bigger picture while how to apply it on the micro level too. So
I'd also love to get her back on to do more of like a free flow conversation, because I'd love to ask her, like when she says she said she was a prop trader for an actual bank. Like I always want to know what that really looks like, because I have a feeling it doesn't look exactly like what we do with our cute little prop firm accounts. You know what I mean? There's got to be some big
and how that relates. Like how does that relate to having intraday trailing drawdown and how we're going to take our trades? Yeah, totally.
Exactly.
But
all right,
definitely,
guys, I'll copy the names.
There was no reason to ask too many questions, because everything she was giving was she was also answering the questions I was having as she went.
Yep.
So really great guest to have on. So we're gonna do it.
Yeah, I'm copying the names right now.
Okay, what should we do? Wheel of Death or?
Let's do a race. We'll do a race. I'll pull it up. Let me get rid of this.
Imagine full porting a bank prop firm account. Yeah, watch a rogue trader. A little stressful, but really good.
Yeah, let me just share this tab. There we go. Pull this up. Just bear with me, guys. I gotta log into my Duck Race Premium.
Weekend races feel different.
All right, I'm gonna drop the names.
Duck Race Premium. Man, I need to get on that level.
That's when you know you're a real streamer, Luna. You got to have access to Duck Race Premium.
It's true.
All right, guys, here we go. We'll do a 1 minute duck race. Classic. Can't go wrong. Drop a 1 in the chat when you're ready.
We need Luna commentary.
Dude, I heard your zombie race commentary was like fire. So maybe we do need your commentary.
I don't know if I'm ready. Okay.
All right, we're getting some ones. Let's do it. Okay, here we go. Bam.
All right, let's go. Who we got in here, guys? Do you see your name? If you don't see your name, then you're probably all the way in the back. But we know Duck Race. We got to wait for that NOS. But I don't know if ducks have NOS. So let's see. We got Thycel, Irvry, Ceylon 033 holding the lead. It seems like a steady race to start, but we all know it's anybody's race. Anybody's race could sneak in here. I don't know. Some of these ducks, I didn't know ducks could wear suits or have hairdos, but. All right. Gale taking the lead by far. Oh, what's up? Dreamer in the race, JREMR. Okay, so this race is coming to an end, and it looks like it's anyone's race. Rebecca, wow, no NOS.
That was close.
No NOS.
Right. No NOS. All natural. No performance enhancing drugs. Shout out Rebecca Daniels. Big W. All right, I'm going to drop your name in Discord. And you can claim your account through supports like always. Let me drop that in the Discord. Congratulations. Luna, before we go, man, any last takeaways maybe on the stream? Well, anything else that you're thinking about that you want to mention?
You know, I mean, my biggest takeaway, I already said it. It's very I don't know what the word is, idiosyncratic or something, really just applying to what I'm doing and thinking about my trading with that with the London IB and the timing thing. And like, to me, I always thought that the timing at the very least made it so I don't overtrade. You know, like if you only trade the New York or the London IB, well, it gives you less opportunities to do something really stupid at the end of the day. But hearing that directional bias, or what she was talking about was continuation bias in London, and then also for MOC, it's just confirming what I've felt. And then I've also noticed that I started trading, I'll fade the initial balance breakout during in New York a lot more. When I get on my New York stream, because I stream a lot of times during New York, I get on and I'll actually end up not taking the breakout and I'll fade it. And I'll take the exact opposite trade. And she just confirmed all of that is something that I should lean into and really look at those patterns of the timing. So, I mean, I really just took that away for myself. And especially as streamers, we have certain hours that we trade too. So we need to be aware of this. And then the other thing I wanted to ask her, which I didn't get into, but it was the summer doldrums. Like, is this really a thing? Is there also a bigger time period? Like we're talking about the elections. And then also, well, what about the winter? What about the new year? What about that? So yeah, what about you? Any takeaways?
The biggest thing was again, just the inverse correlations with the yields and crude oil. Like, again, I'm a technical analysis junkie, so that's a purely technical thing that is still based off of fundamentals. Like, it's rooted in fundamentals, but it's a technical, it's a technical thing that I can actually study on the charts, which that got me excited. So that's probably the biggest thing for me. And I just loved feeling vindicated about the 8 p.m. kill zone in Asia, because I'm telling you, it's like crazy. You guys do some back testing, especially if you're trying to trade the Asia model that I've been using. Like, you do not want to trade until 8 p.m. Eastern. She said 7:30. Even for me, it's 8 p.m. Like, on the dot, you will see a volatility injection in the Asia session on NQ. It's like clockwork. So those would probably be the two big things for me. I'm excited for next month. We got to think about what we're going to do. I'm sure we'll field some questions on stream throughout the week. We'll try and figure out what we want to do for next month.
Yeah, but what an amazing guest to have on, and so knowledgeable.
Yeah, absolutely. All right, guys, I guess that's it. Let's all go enjoy the rest of our weekend, our Saturdays. I don't know what time it is by you guys. It's 1:30 p.m. Eastern over here. So I think we'll call it there. Can't wait to see everyone on Monday morning. As always, 4 a.m. Eastern, Luna will be kicking us off. And as you guys know, we're running a 12-hour stream now, 4 a.m. all the way till 4 p.m. Luna, myself, and TraderMate Alex. It's going to be exciting, man. I'm ready to get back.
Stoked. Did you grab that giveaway entry to post, or should I try to find it? I already lost it.
I posted it inside Discord. I said winner and tag.
Okay.
Yeah.
Perfect.
So good.
I'll put it in the Slack.
All right, cool. Thank you. All right, guys, I guess we'll call it there, man. Everyone, have a wonderful rest of your weekend, chat. Thank you for tuning in, and get ready. We're going to be doing this every first Saturday or last Saturday of the month. We'll make sure to give everyone more notice next time. We'll promote it for a week straight. But I guess that's it. Peace and love, everyone, and we will catch you Monday.
See you guys there. Thank you, chat. Have a great weekend.